Simplicity does not precede complexity, but follows it. Alan Perlis. My friends, we have gone through all the complex. We have narrowed it down to what we find works, and you need to prove it to yourself by being with us 10 to 15 minutes each and every day. Practice trading until you figure this out. And it is fine for you to modify what we do to fit your skill set, what you've learned, what you like to do. Again, we can be a starting or an ending point for you. We just want you to be with us and learn how this works. And again, on-the-job training, the best way to learn. Let's jump into these charts and see where we are today. Of course, we always start with the S&P 500 on our smallest chart. We see on the 95-minute chart throughout the course of the day, really up in the morning, and then paring some of that back in the afternoon, up 1.17%. We are still well below the 200 EMA on this half-day chart. What are we waiting for? Well, we're waiting for things to get where they are right now, and as soon as they start to roll over and head down, we'll be ready. Is that about to happen? Couldn't tell you. Don't know that that's going to take place anytime soon. We look at where the volume is. We can see how there was a nice spike there in the down volume in the afternoon. So they could be getting ready, but I'm just going to wait, watch and see. As soon as we see the STC go to red, we will be ready to go. Let's check out our intermediate and then our largest chart. That is the 2-day and the weekly respectively. We're still negative on the STC. We do have a nice big green up candle there. But again, we're also quite below, well below the 200 EMA. And what does that EMA mean for us? It's the exponential moving average. And when we're below it on any particular chart, it means that we are clearly in a down trend. And we're looking only to take down moves on that specific chart. But we like to know where all the other charts are because they help us in our decision-making processes. We like to say all the charts all the time. It's very important for you to understand, know, and know how to apply those things in your practice trading. Very, very important. And I was looking at the training that we put online today. Oh yeah, it's dollar cost averaging problems and our solution. If you're a subscriber for free at chartingwealth.com, that'll be in your email today. Check that out. If you're not, why aren't you? It's free. We don't ever spam or sell that list, so please sign up. And Patreon members, we really appreciate your support. We move on to the weekly. We have a green spinning top. Now again, we see where things have come down. They bounced off on that week beginning the 3rd of October, down the next week, which gave us that opportunity the week beginning the 10th of October. This week, a green spinning top. Again, not hitting those lows of the last week, right there on the 200 EMA. We'll see where this is going. Maybe the market's going to bounce up for a while. If so, that's fine. Whatever the market does, my friends, we are trend followers. We can't make it do our will. The smart folks just follow the trend. That's what we look to do. We look at the NASDAQ 100, the tech stocks. We can see it's heading up also, really booming up in the morning, pairing off in the afternoon, ended up the day up 0.79%. It's now above this center band here. You can see this little darker area. We always want our STC to go above that before we jump into any down moves. So it's, again, reset itself. It may go higher, that's fine, but we're in the category where if it starts to roll over, we would very much consider jumping into a new down move. Of course, we took that profit last week of the 4.76%. That was quite nice in that prior down move. Look at the 2-day. Again, a solid green candle with a wick on top, no wick on the bottom. And of course, the STC is still negative. And the weekly is still negative, so we are negative 14 on both the S&P 500 and the NASDAQ 100. What does that mean? Just a quick way for us to understand the that little formula that we've come up with, the success multiplier formula, because it immediately tells us at a negative 14 that the 2-day and the weekly chart are negative. That's what that means to us. We're simply waiting for a reset on the half day. Now, let's move on to 20-year bonds. Way down in the morning, losing some of that down move in the afternoon. Ended up for the day up 0.23%. STC is still headed down. And again, these are Heikin-Ashi candlesticks, so you're like, wait a minute, how's it up? This doesn't look up. They're Heikin-Ashi candlesticks. If you've not taken that training, it is about time for me to put that training back in. I'll put it at the end of today's video for those of you who subscribe to our video at YouTube. If you're not, please do so. You should see this pop up though at the end of today. I'll put that in there for you so you'll understand what we're talking about there when it comes to Heikin-Ashi candlesticks. But we can see that again, we are still, in a downtrend there on that half-day chart. We took 2.83% out of the market on that trade a few days ago. Where are we on the weekly? It is still, the 2-day, it is still down. Nice big red down candle. Where are we on the weekly? Down also. And even on the weekly, you can see on bonds just how far below, look at this, how far below the 200 EMA we are. Let me zoom. Look at that. We are that far below the 200 EMA. It is amazing how much bonds have just. Would you want to buy a bond? Put your money into that? No, most people are saying no, we don't. So we see them continuing to just trash down. And of course, you can see where we've had a couple of good trades on those down moves on bonds. So again, we'll continue. We've had a couple of nice down trades. That one didn't work, but this one did. That one did. This one did. Again, all we got to do is wait for the perfect setups. First rule of trading, don't lose money. Second rule, make money. That's where we are on bonds. Let's move on to gold. Gold up a little bit for the day, 0.22%. Still in the right direction, still in the green. You can cash out when you feel that's appropriate if you don't want to wait all the way in. Don't know. I don't like trades to get this long. It's gotten long. But again, what do we have going for us? Well, we're still negative, of course, on the STC on the half day. The 2-day, now it may be topping now. We have several days of red down candles, but it's still green. We've warned about that the whole time. And what about the weekly? Of course, it's still red, and we're going into the second week of red down candles, not hitting that low of last week yet, but we've got a few more days to go. So I'm continuing this trade for now just to see if it's going to work out like those other three did on the S&P, NASDAQ 100, and 20-year bonds, those down plays. So we'll see how this continues to go for us. That's where we are on gold. Now, lastly, as we almost always do, lastly is Bitcoin down 1.70% for the day. And of course, when we look at where Bitcoin is, it is in the green here on the STC, but because of this real sideways slide, not giving us a whole lot when just period. As we look at the bigger charts, the 2-day, we can see where things have languished here around that 1820 mark or so. And it's been going there for a while. I hope that it's building a base. We can see the same thing here over the course of many, many weeks where things have gone up and down and sideways. So hopefully Bitcoin is going to build a base here at some point, take off and take the rest of the cryptocurrencies with it. Don't think there's been market capitulation yet. May have some more down moves to go or just some more languishing at the bottom. And once it does start to move up, of course, since we track it every day for you, we will be watching for it and ready to jump into practice trades as Bitcoin recovers, which I hope it does. And invariably, things tend to do that. So we'll wait, watch, and see. My friends, that's where we are. We love to hear from you. You have questions, problems, concerns, please write us, cw@chartingwealth.com. And again, support us at Patreon. Great gifts there for you, including that 3-part series, Options Made Simple, The Charting Wealth Way, our 20 weekly vertical crossovers we endeavor to get to you every week, early access to charting cryptos and commodities on Wednesdays, and of course, once a month, that live Q&A call-in session where we take your questions, help you backtrack your favorite stocks and ETFs for practice trading. you name it. We try to do what you need from us. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.